Adjusting entries. Adjusting entries are journal entries that are made at the end of an accounting period to adjust the account records. This is to accurately reflect the revenues that have been earned but not recorded, and expenses that have been incurred but not recorded during the current period. Adjusting entries are accounting journal entries that convert a company's accounting records to the accrual basis of accounting. Recording adjusting journal entries is the fourth step in the accounting cycle and is important before the books are closed for the period and financial statements are issued. According to the matching principle, the expenses have to be matched to the accounting period in which the revenue paying for them is earned. There are four main types of accounts that need to be adjusted: deferred revenues, accrued revenues, deferred expenses, and accrued expenses. Deferred revenues are revenues received in cash and recorded as liabilities prior to being earned, for example, subscription revenue. Accrued revenues are revenues already earned but not yet paid or recorded, for example, service revenue. Deferred expenses are expenses paid in cash and recorded as assets prior to being used, example, insurance expense and depreciation expense. Accrued expenses are expenses already incurred but not yet paid or recorded, example, salaries expense and interest expense. Here's an example of an adjusting entry, specifically a deferred revenue adjustment. So suppose that a company sells 12-month subscriptions to its monthly magazine. On the 1st of January, the company receives a total of $960 for 18 subscriptions. To record this transaction, the company would make the following entry in its general journal. So the cash would be debited $960 and the unearned subscription revenue would be credited $960. Then on the 31st of January, the company provides 1 month of magazines and has therefore earned 1 month of revenue, or $80. The accounting system has not reflected this earned revenue to the following adjusting journal entry would be made. The unearned subscription revenue would be debited $80 and the subscription revenue would be credited $80. Thank you. This was an adjusting entry.